Hi, thank you for joining the Cobalt crypto asset webinar. We have a pan-Baltic perspective on the latest developments in respect of crypto assets and have divided our presentations into three parts. We'll start off with an overview, focusing on the regulatory aspects, followed by AML, CFT, and sanctions. And we will conclude with the tax aspects. You are welcome to post any questions you may have. We try to answer them while we have a discussion round with our colleagues. And apologies if there are too many questions, we might not be able to respond to every question, but you are welcome to reach out to us after the webinar and we can continue the discussions and assisting you post this webinar. So let us start off. The first part will be an introduction on the main regulatory trends and developments in the Baltics. We have a broad variety of individuals listening in. You might have a very different background in terms of as to how deep you are and have been involved in the crypto area. Therefore, we provide a bit of a background on the developments in the EU and the Baltics. Some of you may know the crypto sphere came into regulation or under regulation due to AML reasons. It was the AML directive that was the first act on EU level that set out requirements, AML and CFT requirements in respect of exchange and transfer services. And crypto assets were also covered, and the risks were also covered in national risk assessments and supranational, EU supranational risk assessment. And albeit they were regarded as high, there was not much of a coherent approach in the initial days. There were local regimes in all of the countries. Some were more sophisticated, some had a lighter touch. And that all changed with the adoption of the MiCA regulation. And there's a broader scope of services that has now a pan-European united approach. In addition to that, all of the three countries, Estonia, Latvia, and Lithuania, have national implementing legal acts that provide some additional requirements in respect of MiCA. And there are also a broad variety of EU level implementing acts as well as guidelines. Very quickly, just for you to understand the level of detail the European rules are currently covering, there are around 1,000 pages or even more of technical standards, guidelines that have been imposed, and there will be more on the European level. And in addition to that, crypto still will be covered in the new AML package with a specific focus on the risks arising from self-hosted wallets. What we have seen in recent years due to this trend is that after MiCA became effective, many of the service providers that were operating, they did leave the European market, or they left for the DeFi sphere that is not covered by the MiCA regulation. Or alternatively, they concluded cooperation agreements with licensed service providers, and that was a big part of our work in the end of last year, where we assisted previously non-licensed service providers in agreeing with service providers that intend to apply for MiCA and were covered by the local regime to partner up so that they would have a legal basis to provide services. What we have also seen in our practice is that traditional financial sector entities are expanding into crypto services, and the Lightning network and tokenization of real-world assets are also some buzzwords that can characterize the current phase of MiCA. And we will now very quickly have a comparative overview of the requirements in Estonia, Latvia, and Lithuania, so that you would see whether there are big differences in the approach. But before we do so, I wanted to also remind you that this presentation will be recorded. You will receive the recording after our presentation, so you don't need to bother taking notes or photocopying any of the slides we are presenting here. And let's start off with a comparative table on what's the current status in all of the countries. The current number of VASPs in all of the countries varies quite much. As you can see, in Estonia, the number currently is 37. And when we talk about VASPs, we talk about entities that are licensed under the current local regime. So they have not yet received the MiCA license that would enable them to provide services on a pan-European level. And in Estonia, the number is 37. In Latvia, it's currently 0. In Lithuania, it is 361. And as a bit of a background, the number in Estonia used to be around 2000 when there was a different licensing regime for exchange services and transfer services, and it used to be around 2000 a couple of years ago, but there was a reform in order to reduce the crypto risks, and we had our own almost mini MiCA implemented a couple of years ago that significantly strengthened the regulatory requirements that led to the drastic reduction of numbers in licensed entities. And as of this year, it is possible and even earlier, most of the end of last year, it was already possible to apply for the MiCA license. The relevant authorities are the Estonian Financial Supervision Authority in Estonia, the Bank of Latvia, in Latvia and the Bank of Lithuania. As you can see, we only have one licensed entity in Lithuania, and all the authorities unofficially have indicated that there will be around 10 by the end of the period. The reason as to why, at least in Estonia, the number is so small is that we have a very long grandfathering period, and only now the first applications have been submitted. Only now and maybe a couple of months ago, but it hasn't been a very vibrant licensing scene yet. But this is about to change. And when we talk about whether there are any additional requirements in all of the jurisdictions, there are some. In Estonia, you would need to have a management as well as supervisory board. You need to audit accounts, and the supervisory expectation is that there needs to be at least one local member of the board. In Latvia, there are some technical guidelines in order to apply the EU guidance. So there's a specific act that ties these guidelines and with the Latvian legal order, and there's also expectation regarding local management and local AML personnel. In Lithuania, the same mandatory audits, local MLRO CEO, and requirement of the management board member to be Lithuanian and preferably independent. What might also be interesting in practical terms are the fees going forward. In Lithuania, it is simple. It's 0.7 of annual income. In Latvia, it's 0.6 of gross income with a cap. In Estonia, it's gradual. It has a fixed part depending on the service you would be providing. And then it also, under the law, has a broad variety of the percentage based on the services you would be providing. The broad variety available under the law has not yet been detailed. It has not yet been specified what the number will be, but unofficially it will be the lowest end of the scale. That has been indicated by the EFSA, but until it has been adopted, you would not know, of course. And these fees are not cumulative. Only the highest one of them would apply. And I'd say the best thing to do now would be to have a short discussion on some points that might be relevant or might be interesting for you from a regulatory perspective. And maybe, Eva, you can add to the slides we had we were presenting beforehand and indicate what are the main preconditions in order to have a successful licensing process.
Yes, sure. Hello, everyone. So let me remind you that in Lithuania, we have only one license issued to Robinhood, a well-known brand that already held a MiFID license issued by the Bank of Lithuania. So typical crypto companies have not seen a success yet. However, we should see movement soon, given that we are approaching the end of the grandfathering period. And by the way, last week, the Bank of Lithuania announced two interesting facts. First, around 50 companies have applied for MiCA license since the start of the year. in Lithuania, and second, that they are currently assessing only about 10 applications. And what the regulator claimed is that a majority of applications were of poor, insufficient quality. Market participants, on the other hand, suggest that this may also reflect limited resources of the Bank of Lithuania to process the applications. In any case, we will see how these things develop further in Lithuania soon. But as regards the licensing process itself, I would like to stress several key points for the applicants. Fundamentals that always matter. So who owns the company, who manages it, where the money comes from, and whether you have sufficient capital. These issues are always scrutinized in very detail. So keep ownership clear and transparent. Make sure that the shareholders and managers are clean and have relevant experience. Show legal documented source of funds and have enough capital for your plan. Another important aspect is clarity of the business model. So define and agree on your model internally, and it is very important that all team working on the licensing application is aligned and understand this. So explain in writing what you do, for whom, where, and how, cover products, customer journeys, pricing, flow on funds, and other things. As you may map the flows, you may find that MiCA license is not sufficient, and you should consider e-money institution license as well. Another key aspect what we see from the practice is that it is essential to ensure consistency across all documents. Each document needs to say the same story: program of operations, risk assessment, ML procedures, IT documents, financial. If you intend to offer custody, the documentation cannot say exchange only. All the documents need to be aligned. Another key aspect is a local presence. At least the Bank of Lithuania had a lot of notes on this, and the Bank of Lithuania expects the real operations, premises, and key personnel in Lithuania. Outsource is possible, but core functions should remain in-house. Lithuania Bank of Lithuania has a number of times emphasized that empty shell setups are not welcome and will not be considered. Also, it is important to plan part of the activity here locally, as our markets cannot be used as a licensing hub only. Governance structures, Monica mentioned a little bit about the expectations of the regulators. So for Lithuania, it is important that we have a board of 3 experienced members, where at least one must be Lithuanian and should be independent. And you should also staff other key roles, and expectations are rather high here. You should have compliance officer, money laundering reporting officer, risk officer, finance officer, sanctions officer, information security officer, DPO, and so on. Of course, if your scope is smaller, some roles can be combined, for example, compliance with risks officer or DPO, but this needs to be careful. Compliance and operational systems, have them real risk-based systems, not just the paperwork. So your anti-money laundering, internal controls, risk management, cybersecurity, client and safeguards must fit your business scale and complexity. I would emphasize that for Lithuania, AML is priority, and we will discuss this a little bit later in the second part of our webinar. And it is very important that you understand your processes. The regulator has challenged applicants who only prepare documents based on supervisory feedback without truly understanding their own operations. Documentation quality is critical. Regulators will not accept submit now, fix later approach. Applications that are incomplete or generic are would be rejected, and sometimes this creates tension between us lawyers and the clients, as we are seen demanding too much. But actually, in these cases, we just try to prevent rejections. And the last point that I would like to emphasize is expect for the best, but prepare for worse. So be ready with alternatives. If the selection jurisdiction does not work or timing becomes problematic, have backup options ready. Consider other jurisdiction issuing MiCA licenses. Of course, select carefully, taking into account timelines, supervisory approaches, costs, and other aspects. And if a deadline is missed, which is like relevant for Lithuania now, because it is approaching, you should prepare for termination of activities. At least the Bank of Lithuania is now quite active in sending reminders that if you will not provide the services, you will not receive a license, you would not be able to provide the services. So you should stop, onboarding new clients, you should notify existing clients, you should settle with the clients, and so on. So quite a number of issues to consider, but this is not an easy process.
Thanks, Eva. I think it summarizes the process for all three jurisdictions pretty much. It is definitely not an AML registration regime anymore. The current MiCA application is evaluated with the same standards as would any other application for a financial services license, and that means a rigorous process, systems, as well as experience in terms of the personnel. Also, what is quite relevant is that, and you also indicated it, that you need to properly map your services and everything, all the internal rules, the systems and processes need to follow that. And as you or many of you in the audience are aware, in June this year, the EBA issued a letter making reference to the fact that we should be mindful of the necessity to have an EMI license accompanying the CASP license. And maybe Justina, would you be able to provide us some background as to when this would be required?
Yeah, sure. So as Eva mentioned before, business model clarity is one of the preconditions, right, for the proper licensing, for preparation yourselves in MiCA licensing process. So we need to understand whether or not the potential CASP would be required to have dual authorization. So we have here in the slide listed some dual authorization triggers. But before we start going into specific business models, I want to confirm, as Monica mentioned, European Banking Authority took the initiative to clarify. So when exactly virtual asset service provider willing to receive the MiCA license would also need to have electronic money institution or payment institution license. So that depends on the business model and specifically whether or not your activity involves electronic money tokens. So electronic money tokens are the tokens which are patched one-to-one to fiat. So those are normally stable coins, like, for example, USDC. The previous stable coins like USDT are not now MiCA licensed. They are not confirming the requirements that are needed for a stable coin to be used by European level CASPs. So if you are issuing, for example, or keeping in custody, as well as transferring from the third parties or from your client wallet accounts at other crypto services providers to your wallet, This would fall under requirement to have not only MiCA, but also electronic money institution license. What's important is to, again, analyze how the transfers will be facilitated, how long the funds will be kept in the account, better understand also the differentiation between electronic money and payment institution, because there might be the difference in the obtaining of a particular license. Also, this European Banking Authority non-action letter advises that national supervisory authorities should not require this authorization until 2nd of March 2026. So the companies still have time to obtain this another license. But what's specific, let's say, to Lithuanian market is that Bank of Lithuania, who is now evaluating MiCA, is also at the same time requiring for the applicants to submit also additional applications on electronic money or payment institution licenses. So in the way, Bank of Lithuania is stating that they will take the decision on whether or not to issue both of the licenses at the same time. So we expect that by the end of this year, some applicants will receive dual authorization already without waiting for the March to come. Coming back to the business activity, as you see, if it's only related to crypto exchange, custody, advice services, which are not directly related to electronic money tokens, then you'll be fine with only MiCA license. The same will happen if you are issuing tokens which are not EMTs. However, if you are issuing or transferring electronic money tokens, which again are stable coins, you also proceed with dual services. MiCA related ones plus, let's say, off-ramp, on-ramp fiat payments, issuing of the crypto-related cards to your customers, which are dealing with, again, electronic money tokens, then you will be required to have dual authorization.
Thanks, Justina. Now that we are in this new reality, that the cryptosphere in many aspects will be covered by the MiCA regulation, and there will be licensed entities operating. What's there to consider for merchants when operating in the cryptosphere? And maybe Edgars, you can shed some light on that.
Yeah, sure, Monica. Thanks for the question. Some things to look for when you are choosing your financial institution, your business partner, someone who will help you move money and earn money. So that it means that this institution must be fit and proper and keep your money, your funds safe. So in order to do that, to choose the right one, please look for licensed entities, MiCA licensed, on ESMA webpage or on National Register. Check whether they have some audit reports or limits or incident history. You can ask them how they store their crypto. So what is their approach there? Not to avoid such situations we experienced in the past, that manager of a crypto exchange passed away and he was the only one with the keys to crypto assets of their clients. So you need to be sure that you will get to your assets and that they are protected by proper cybersecurity. And of course, check for country of incorporation, the governing law of the contract you are entering into, and courts which you can litigate if necessary. And of course, the main thing here is avoid offshore unregulated entities, avoid third country CASPs, Because if you want to move the money into European banking system and avoid too many questions from your banks, then you need to use licensed entities, because at least this would be an argument that you're using someone licensed within the EU rather than some third country which is not compliant with MiCA standards. So basic due diligence, I would say, on your business partner, and in this case, the financial institution offering you crypto services.
But is this the actual reality? Is crypto, in your opinion, is it something that is used that often by merchants? What are the main trends currently?
Yes, what we have seen also with our clients, not only crypto, potential existing crypto asset service providers, but also with some businesses. And actually, it's a wrong perception that crypto is only some individual trading, profiting or losing money. Actually, businesses are using the crypto quite extensively. For example, if you have a business partner in some distant country like Australia, Argentina, Japan, even the United States, and you need to move money fast with low fees, you would like to avoid foreign currency exchange risk there and correspondent banking risks, which many companies face because their banks are not properly connected to the globally systemic banks. Stable coins, they are pledged one-to-one to euro and dollar. They're not volatile, so you can use them in payments. And payments take place in seconds. They are traceable. They have on-chain proof of payment, and you can put those business-to-business payment terms in the contract, specifying the payment, which stablecoin will be used, who is paying gas fees, and how the invoices then will be made equivalent, so you can calculate the amount of tax and pay the tax in fiat. So I would say this is the trend, and those companies who haven't considered this yet, I would suggest them reconsider this and then evaluate their options there, because banking industry is not the only one, and especially when you are moving money outside the European Union and SEPA zone.
What about use of crypto in employment contracts as a payment of salary, for instance?
I will start covering this. So, in general, employee salary must be paid in money, that is in euros or another currency. And so the main salary component cannot be paid in crypto assets, but the laws do not prohibit payment of bonuses or additional incentives in other forms. But we discussed with Edgar just before the webinar that confidentiality issues are relevant in this case. Edgar, will you cover?
Yeah, sure. If those crypto assets are used for paying bonuses, you as an employer, what you would like to have, you would like to enjoy confidentiality, that no one else, your competitors, they cannot see how much bonuses, what amount of crypto you use for paying bonuses. Otherwise, they can ask your employees to work for them and for it in the easiest way. And on-chain payments are public, so there are several ways how to tackle this issue. First of all, you can use separate wallet, not the one everyone knows you are receiving payments or making payments from, or two, use some off-chain custodial systems like exchange, where you have all your employees and you have the same accounts within one exchange, because exchanges are not on the chain usually. Or you can use some privacy coins as well. We're not encouraging this because this would entail reputational and compliance issues from third parties. So then you must ensure the privacy part, the privacy and confidentiality, to ensure that your employees still work for you, and is not that easy to to lure them to other company.
But what about use of crypto to pay share capital? From an Estonian perspective, it would theoretically be possible as an in-kind contribution. And for a limited liability company, it would be the management board who would then need to take the risk of evaluating the in-kind contribution. And going forward, the negative equity risk needs to be borne in mind, but technically it would be possible. What about Latvia?
So more or less the same approach. It's clearly stated in the law. We have exemption for stablecoins, so that that you don't need an auditor to evaluate them, but for other current coins or crypto assets, you need the evaluator, I mean the auditor. And of course, in Latvia, we don't have so strict rules on negative equity as it is in Lithuania and I think in Estonia as well. So that's why the management board is not so afraid of putting their signatures on the value of the equity and the changes which take place later on.
And for Lithuania, I would say that part of the share capital may be paid by non-monetary contribution, but such contribution needs to be evaluated by an independent appraiser. Further, that share capital needs to go through the notary and be registered with the commercial register. So the completion of the process depends on some third parties and might be difficult to implement yet. And of course, we need to check the requirements in each specific case, because sometimes only monetary contribution could be used for the share capital increase or certain assets, claim rights, and etc. So a specific regulation needs to be taken into account.
Obviously, yes, it's a case-by-case analysis that needs to be that needs to take into account the fact that you need to protect the third parties, any of your business partners or potential consumers. And what's the consumer protection view in respect of crypto that has developed due to Mika? Eva, maybe you can elaborate.
So before Eva jumps in, just to on the Lithuanian specific issues, I would say that without going into a lot of details, we know that Mika was introduced just to protect consumers, and CASP must be therefore CASPs are licensed. They disclose risk and fees, and of course issuers then publish white papers, for example, for ICOs. And there are more regulation, more supervision. So I think from this point of view, consumer protection is more or less ensured. However, clear communication, fair marketing, wallet security, but still, if the crypto in question is volatile, they still have a risk of losing money, not because of the CASPs, but because of the nature of the assets involved. Consumers, they are on their own, of course. They need to make those informed decisions. Justina?
Absolutely. No one is taking away the market risk.
Yeah, Justina?
Yeah, I want to add specifically also on Lithuanian market. We do also need to see national Lithuanian consumer laws to ensure the full protection of consumers that are dealing with crypto. But also what is important to mention is that in Lithuania, especially for Lithuanian clients that are being served by virtual asset service providers and later by CASPs, the requirement that is being provided by our regulator, Bank of Lithuania, is that all client-facing documents must be available in Lithuanian. So the website should have Lithuanian language, the terms and conditions, the complaint handling procedures and rules that you publish online, and submit to your clients beforehand must be translated in Lithuanian, and in cases where the clients are Lithuanians, Lithuanian version must also prevail in case of discrepancies against English language.
Thanks. And before we conclude with the regulatory aspects, and Edgar's will take over to discuss AML, CFT, and sanctions, there was a question from the audience that related to the EMI, to the requirement to receive an EMI license. And to clarify, EMI licenses are required not for each and every crypto transfer. They are required where electronic money tokens are concerned. And electronic money tokens basically enjoy a dual regime. They are crypto assets, and in addition to that, they are electronic money. So both worlds apply, and this is why an EMI license is required. Sometimes, if electronic money tokens are not concerned, but due to the fact that client funds are held and transferred, payment transfers are made, a payment institution license is sufficient. But that is a different analysis from the EMI license. So a careful mapping of the services is required each time. It might be that when you would be providing traditional payment services because you hold client funds, a payment institution license is required, but that is not different. There is no change compared to the current interpretation in respect of that. So whatever you do, let's map the services first and only then apply. Edgar, the floor is yours.
Thank you, Monica. I will try not to be Grinch who is stealing the Christmas, so I'll try to be short on the risks when it comes to AML with crypto. So we still see that crypto is still viewed as synonymous with money laundering and terrorism financing and sanctions risks. However, I would say that this is more legacy perception, that it's unregulated, volatile, anonymous, but actually this is the risk we can deal with and can mitigate with proper controls. So we would say no to this legacy perception. We need to move on from this. Still, we have a problem with a lot of financial institutions, and I would call it a problem, that they have limited in-house crypto literacy, compliance teams. They still go with the conservative stance there. We have also issues that many financial institutions are not accepting crypto-related payments or clients working with crypto just because of core legacy banking systems rarely support wallet identifiers and on-chain data, and all those new monitoring systems, they have significant costs. And of course, implementation of travel rules sometimes is quite complicated for institutions who have worked with SWIFT data only in the past. However, if you look at SWIFT messaging and fields that the logic is the same, both for travel rule and other information, more or less. Sometimes banks define the zero crypto exposure in their risk appetite statements, but still they have some banks in the Baltics who are servicing crypto asset service providers and are welcoming clients who work with crypto. So if you work in this field, check for the most appropriate bank whose risk appetite is open to such risks. We hope there will be more in the future. So what to do now? So we said don't focus on the risks only. Crypto can bring benefit to business, make faster payments, especially for underbanked industries, which are a list of it. I would say we can make a list of those industries, and they know it. It means that this is something to explore, how to make your payments more faster and safer. And of course, cash is also widely used in crime, but we don't refuse cash at all times just because someone is using cash for committing crimes or benefiting from the crime. So crypto should be treated the same way. When we look at the statistics, so all the numbers are wrong at this moment because they are growing and changing each second. But speaking in estimates that almost 700 million people are using crypto or owning it. Market capitalization is in trillions and it is growing. Most daily turnover consists of stable coins, and because they are used for business transfers. We see that still illicit flows are growing, even 25% per year since 2020, so it's quite steep growth. And unfortunately, we see more and more sanctions exposure related to crypto, specifically this new cryptocurrency sanctioned recently by European Union, this A75 registered in Kyrgyzstan. And of course, we see that due to crypto, we also need to rethink placement stage in money laundering. So the money is not placed like cash, Smurfs placing cash after dealing with drugs, but the crypto, they are already into financial system in some way. So it makes us rethink, use some tools, and look at the risks from different perspectives. Going forward, so about the 19th package, so there's a new prohibition not only to use payment cards for Russian citizens as it is for traditional banks, but also there's a new prohibition in place to use to provide crypto asset services directly or indirectly to Russian nationals, not only legal entities but also nationals who don't have a permanent or who don't have residence permit in European Union. So it is a challenge now throughout Europe what to do with those people. So and many financial institutions are offboarding or stopping providing services to them. And of course, what we see from key risks regardless of the 19th package is still stablecoins used for sanction circumvention because controls are less strict there, especially when you use cash from third countries. We still see crypto-related fraud in investment and romance scams in billions, but it's not only connected to crypto because everything else could be also used for fraud. We see NFTs and gaming for self-rounding, wash trading, and those peer-to-peer transactions between the self-hosted wallets and cold wallets. Even though my personal point of view is that doing due diligence on self-hosted wallets sometimes is easier because you see all the transactions on the chain, but you can't verify the identity of the person. Mixers, tumblers, still they are used to obfuscation of the trail in the blockchain. And of course, what we see as well is we can see a lot of new tools for risk mitigation, transaction pattern monitoring, automated blockchain analysis, enhanced authentication verification, and of course the main thing is travel rule compliance. Monica will elaborate on this later on. But yeah, this is one of the key tools now introduced in the Union. Simple tips for you how to do diligence. You say, I don't have those sophisticated blockchain monitoring tools. They cost a lot, sometimes tens of thousands of euros annually. So what can I say? Just 2 tips. Off-chain trading, it also happens. You can open a basic payment account and buy and sell crypto off-chain. So there's off-chain trading. And then I would say, if I have financial institutions and accepting those funds later in the stage, I would say I'm not concerned about source of funds because you are trading or exchanging your own money and you are not doing any on-chain trading, so the risks of some third-party involvement are low. If there is on-chain trading, you can always check all transactions which took place on-chain with some public explorers like OKLink.com, or there are a number of them, depends on the chain. Check the sender recipient, check the address. If it concerns, for example, stablecoins, you can use this how it looks on the token contract link, and so on and so on. So you can do the basic due diligence yourself. If it is more complicated, then of course you can say, I'm not able to do that. I need some more sophisticated tools and pay for them. If somebody is sending you money, check the wallet, the address of this wallet, and you can see what are the transactions. Are they like, do they make sense, or what could they be related to? But of course, to do more technical analysis, you need more sophisticated tools like this, for example. I pasted some of my own transactions there, so as I see, you don't see the full transaction hashes. So, for example, on the left corner, you see, for example, if you have you can use those analytical tools. Well, they can say the darknet exposure, sanctions exposure percentage, geographical risk score. So those tools help you to do the scoring of the transaction. Of course, if you are, you can find all your transactions. You know the hash. Find on the blockchain. So, for example, it's my transaction 2 years ago. I bought some NFTs there. I'm not indicating the price, of course, but anyone can find them and check what they are about. So the transparency is even more than in banking. So you can't access account statements, right, to any person. But here you can check my wallet and see what I'm doing there, if you know the hash of my wallet. So the transparency sometimes helps, especially for self-hosted wallets, which are called risky, but doing due diligence on them is sometimes even easier than on some off-chain trading platform. But how does Mika help here? So cybersecurity, supervision, travel rule messages, and of course, with this regulation, maybe the risk, the acceptance of risk will become more wider and wider. And now that's why we moved to transfer of funds requirements, which are the key issue here. And I'll ask Monica to take over from here because she has studied it in more detail. Monica, please.
Thanks. Well, the European rules on payments and data accompanying payments have now been expanded. And basically, already for more than 10 months now, it is required for service providers, not for peer-to-peer transactions, to collect data on the originator and the recipient. And when there's an intermediary relationship, so the funds, the crypto assets do not flow from one service provider to another, but there are service providers in between. There are also obligations imposed on them. And there are detailed there's detailed data that needs to be collected on the payer, payee, the ledger address, so on. But there are also conduct obligations on crypto asset service providers that are similar to payment institutions. So it's a mirroring regulation. So originator and beneficiary should both verify whether the data they have collected in respect of their client corresponds to the transfer of funds data that accompanies the payment, and also that the data is complete. So there's a list of data, and before you make the transfer as an originator institution, or you accept the transfer onto your client's wallet, you would need to make a completeness check. So check for completeness as well as accuracy. And then there are also rules to avoid bad apples, bad service providers. If there are errors, if someone's constantly sending you data, missing data, incomplete data, inaccurate data, you could reject them once or a couple of times and request the data. But if these are repeated violations, there should be a warning that if this is continuing, future transfers are restricted. And that is part of your compliance governance as a service provider. There are specific rules to self-hosted wallets. So self-hosted wallets for transfer funds regulation purposes are regarded as specifically risky. Maybe well, there's a detailed set of rules, but maybe what's worthwhile highlighting is that there needs to be a control and ownership check. Basically, because in the case of a self-hosted wallet, there's no service provider, but you would want to understand that who's owning the wallet. And then there are European guidelines detailing this. There are several methods as to how, for regulatory purposes, you can prove or ascertain that the address is then controlled by that relevant person. For example, you can have a small sample transaction, etc. So it is all detailed in the guidelines. And the same requirements apply when you receive transfers from. So transfers to and transfers from, in both cases, if there are transfers exceeding 1,000 euros, in addition to collecting all the data, you would need to have the control or ownership test conducted.
And of course, yes, thank you for emphasizing the struggle rule of compliance and the Satoshi test, which can be used for proof of self-hosted wallet ownership. But now moving on to this AML readiness for licensing part, the CASP part. Justina, maybe you can, because all of this is important if someone is taking care of AML, and CASPs are those who are taking care. So how would you say what they need to be ready for?
Yeah, it's super important to be prepared and implement fully all ML CTF related requirements, including sanctions, as Edgar's mentioned, beforehand, before submitting all the paperwork to your supervisory authority. As ML part in general forms a huge percentage of all documents that are being reviewed by the regulator. And at least in Lithuania, the Bank of Lithuania is kind of performing, full scope of ML audit. So for you to be prepared and be ready to receive various questions from the regulator, we suggest to conduct an internal ML check, maybe even initiating some ongoing due diligence on your client files, reviewing if it all aligns not only with the regulatory expectations, the laws and regulations related to ML, CTF, and sanction screening, but also with your internal policies and procedures. If your compliance officers, your MLROs, and everyone who is touching the client file actually performed all the necessary checks and you have documented it properly. It's also important to update and align your EVRAs and risk assessments in general, so that it will be actual, it will be clear, so that you would understand all the risks that ML is bringing to your particular business, and you have proper risk mitigation measures in place to cover it. Another important aspect is to strengthen your internal governance, specifically related to ML field. So MLRO, the compliance governance, should be clearly defined in your internal paperwork, but it also should work in practice. so that, for example, there is no conflict of interest in place, and all the decisions are being escalated properly. You keep the 3 lines of defense implemented, and everything is clearly structured. The final thing is the comprehensive audit trail. So all the decisions, all the practices that you are implemented should be properly documented, kept safely, and all the decisions also which are related to client files, specifically, for example, related to transaction monitoring field, are also not documented only in your tools that are using, but are also listed down in your procedures. Everyone is aware of it, implemented, and if needed, imply extra measures to mitigate, as I mentioned, any potential risks.
Thank you, Stina. Thank you, colleagues, for your contribution to this second part of the webinar. So we have touched upon business agreements, compliance, AML, and now it's time to pay taxes. And in order to know how much you need to pay, Rokas will take over and explain whether you need to pay and how much taxes you need to pay. Rokas, the floor is yours.
Hi from my side as well. I will focus today on the tax aspects of crypto assets across the Baltics, covering corporate taxation, VAT, and individual taxation, with short comparisons between Estonia, Latvia, and Lithuania. My goal is to highlight where the 3 systems are already aligned and where some differences may develop as the countries implement the MiCA and DAC 8 frameworks over the next 2 years. So let's start with the corporate taxation, and the first jurisdiction is Estonia. In Estonia, the logic is simple and well known. Corporate income tax applies only when profits are distributed. There is no annual tax on retained or reinvested profits. That means that if a company earns profits from crypto trading, staking, or from receiving crypto as payment, those profits become taxable only when distributed, for example, as dividends or non-business expenses. The corporate income tax rate is 22% on the gross amount subject to distribution. For tax purposes, crypto assets are treated as property and not as currency or financial instruments. So when a company sells crypto or receives it as a payment, the transaction is recognized at market value in euros, but no corporate income tax arises until the profit is actually distributed in Estonia. For stablecoins are treated the same way unless they qualify as e-money under MiCA, which might eventually happen, but not yet in practice. And regarding DAC 8, Estonia has a draft law available, although it has not reached the parliament yet. But however, the adoption is expected this year, with the first reporting obligation starting from 2037. So what is DAC 8? This is a new EU directive that will require crypto asset service providers to report transactions and account information to the local tax authorities. In practice, this means that the same service providers who will now need a MiCA license in the EU will also have to report their clients' crypto transactions, so the tax authorities will start receiving this information automatically. In short, it will become much harder for persons not to declare or pay tax on crypto income because the data will soon flow directly to the authorities. And now let's move to Latvia. Latvia's approach is broadly similar as for Estonia. Corporate income tax applies only on profit distributions at the rate of 20% on the gross distributed amount. And there's no annual tax on retained or reinvested earnings. So the principle is the same as in Estonia. Crypto assets are treated as property, and when goods or services are paid in crypto, income is recognized at the market value in euros. But again, the taxation arises only once these profits are distributed. As for TAC 8 implementation process, Latvia is slightly ahead of Estonia because the law has already passed 2 readings in the local parliament. And the reporting, as for Estonia, will start from 2027. Now, Lithuania. Lithuania differs from Estonia and Latvia. Here, corporate income tax is applied annually on profits, not upon profit distribution. The general rates are 6% for small entities and 16% for others, increasing slightly from 2027. Crypto assets are treated as short-term property, not as currency or financial instruments. When crypto is sold or received as payment, income is recognized in euros and included in the taxable profit of that year. Mining income itself is not taxed at the moment of creation, but taxation arises when the mined crypto is sold or exchanged. As for TAC 8, Lithuanian parliament has adopted relevant law, and now the local tax authority is adopting relevant implementation rules. So in a nutshell, at the corporate level, Estonia and Latvia share the model where corporate income tax arises only on distribution. Lithuania taxes profit annually. All 3 countries treat crypto as property, and stable coins are handled the same way unless reclassified under MiCA, and all countries are preparing for the TAC 8-based reporting from 2027. Now turning to VAT, where the systems are largely harmonized because all 3 countries follow the EU VAT directive and related case law. So exchange of crypto for fiat, for example, converting Bitcoin to euro, is exempt from VAT following relevant EU case law. This applies when crypto acts purely as a mean of payment. In Lithuania, there is a small national option allowing a supplier to opt to tax the exchange if the customer is a Lithuanian VAT payer and the place of supply is in Lithuania. Mining for one's own account is outside the scope of VAT since there is no identifiable customer or consideration. However, if mining or validation services are performed for others and for a fee, those are taxable electronically supplied services. This means that for business-to-business transactions, the place of supply is the customer's country, usually under reverse charge, and for business-to-customers, it's the buyer's location. When crypto is used to pay for goods and services, the payment itself is not a separate VAT event, and the VAT simply follows the underlying supply. Investment tokens. When we are talking about investment tokens, which grant profit or asset rights, then these are treated like securities and therefore are outside the scope of VAT. Utility tokens, including those functioning like NFTs that grant access to a product or service, are treated under the voucher rules. So VAT depends on whether the voucher is a single purpose or a multi-purpose voucher. NFTs such as digital art, avatars, or other media are now generally considered taxable electronic services. And the place of supply is where the buyer is located. And under this OSS regime, special regime, can be used for EU sales. So this OSS scheme enables to declare all sales to customers to a local tax authority and pay the VAT for other jurisdiction as well through the local tax authority. Royalties from secondary NFT sales are also taxable, being treated as payment for digital services or license. And finally, on financial and art exemptions, the EU VAT Committee working papers conclude that typical exemptions, as for financial services, or margin schemes, are unlikely to apply to NFTs or crypto art sales. So overall, VAT treatment across the Baltics is nearly identical, similar. And finally, that's turned to individual taxation, where the differences between the three jurisdictions are more visible. For Estonia applied a flat 22% personal income tax on worldwide income. Gains from selling or exchanging crypto are taxable, but losses can be offset only if the crypto was acquired through a MiCA license provider or issuer. If that's not the case, each profitable transaction must be taxed separately and losses can be deducted. The investment account regime now extends to crypto assets as well, but again, only if it's held via a MiCA license service provider or issuer. That means that the tax can be deferred under the investment account regime until the funds are withdrawn for a private use. Income from mining or staking is taxable as business or other income, depending on the frequency of activity. Royalties from NFT sales are also taxable, whether received by a professional artist or by a private individual. Payments in crypto, such as salaries or fees, are taxed based on their euro value at the time of receipt and may also be subject to social tax. So in other words, paying in crypto doesn't exclude anyone from paying or withholding taxes. Stablecoins are treated like other crypto assets unless they are formally classified as e-money, which is not yet the case. For Latvia, in Latvia, individual taxation differs both in rate and in mechanics compared to Estonia. Crypto gains are taxed as capital income at a flat rate of 25.5%, with the additional 3% for income above 200,000 euros. Crypto-to-crypto exchanges are not immediately taxable, and the tax arises only when crypto is converted into fiat or other assets. Losses may be offset against gains from crypto disposal within the same year, and losses from other capital assets may also offset crypto gains. Latvia also operates a similar investment account regime. However, in Latvia, this investment account regime is not available for crypto assets, at least at now. Latvia also has a unique aspect, a withholding tax of 3% when a Latvian entity pays non-residents for crypto transactions, although publicly traded crypto is temporarily exempted until the end of 2027. Mining and staking income is treated as economic activity, which is taxed at 25.5% or 33%, depending on the income level, and subject to social tax when applicable. And finally, for Lithuania, Lithuania applies progressive personal income tax rates, 15% or 20% today, increasing to 20%, 25%, and 32% from 2026, depending on the total income. Gains from selling, exchanging, or using crypto are taxable, but the first 2,500 euros of annual gains are exempt. Losses may be offset only against crypto-related gains in the same tax year, provided acquisition costs are documented. There is no in Lithuania, there is no investment account regime as in Estonia. Income from mining or staking is taxed as business or individual activity income and may trigger a social and health contribution as well. NFT royalties are taxable for the creator or right holder, depending on how the arrangement is structured. Payments in crypto are treated as employment or business income, again valued in euro at receipt. So to summarize, the Baltic countries are moving broadly in the same direction with some national aspects, but the shared goal of integrating crypto into the existing tax and compliance systems. By 2027, crypto asset transactions will be reported automatically to the tax authorities throughout the EU, making a clear swift towards mainstream regulatory treatment. And now I think we can move to tax-specific questions and answers.
Hello, everyone. And thank you, Tonu, for such a comprehensive overview of the taxation rules in the Baltics. I want to continue the individual taxation topic, and I would like to address the question to Sandhya about the challenges in taxation of individuals. What do you think are the main challenges and the main mistakes maybe made by the taxpayers in Latvia?
Yeah, from our perspective, probably there are two issues that are worth to mention. First, as Tonu mentioned, in Latvia, basically, this taxable gain arises only when crypto assets are sold for fiat currencies. And to determine this gain, individuals are allowed to deduct expenses which are related to acquisition of crypto asset. And what we see that sometimes this is actually quite complicated task and individuals might need assistance, especially in situations when those crypto assets have been acquired over longer time using several wallets or exchanges, or in situations when those crypto assets have been acquired actually as a remuneration for the services, because in all those cases there are basically quite specific rules how to properly determine this gain and therefore also properly pay tax. And the other issue, it's related to more historical transactions. Now, probably that's not a big issue. So those historical transactions when individuals have received crypto assets as remuneration for their services, but they have not reported this as taxable income. And this problem basically arises at the moment when individuals decide to sell those crypto assets or use them to acquire, for example, real estate. And one should understand that this might be not only a tax problem, but actually also this may delay those transactions because banks might have questions about source of funds. So this is something which actually, if this has happened, this should be solved beforehand, kind of to avoid even bigger problems. Yeah, that's I think from Latvia.
I think the last bit is quite universal, doesn't only apply to Latvia. And another aspect that is harmonized across the EU is VAT taxation of crypto assets. But I believe that doesn't mean that there are no challenges there. So I would like to ask Rasa from Cobalt, Lithuania, what are those challenges and most common mistakes when the taxpayers are dealing in crypto assets and related to VAT taxation?
Hello, everyone. I would probably distinguish two main mistakes that we see crypto businesses usually making in practice. The first one is rather simple, is a too wide application of the VAT exemption for crypto-related services. As Tono previously mentioned, the Court of Justice of the EU has approved the VAT exemption application only to crypto exchange services, so crypto to crypto or crypto to fiat. However, in practice, we rather often see that businesses tend to apply the VAT exemption to many other services that are somehow related with the exchange service as such. So, for example, we see often even groups of companies providing services to each other so that they could create the whole infrastructure for their business activity. And they apply exemption on all intra-group services that they provide to each other. But very often these services are technical or administrative. So providing a platform, providing a tool for monitoring, for reporting, and etc. So these type of services should not be exempted because the exemption is rather narrow. It's either exchange service itself or intermediation in the exchange service provision. So what I see is that businesses should take a closer look into that position, have a detailed analysis of all the payments that they make specifically within the group and for what exactly these payments are being made to determine the service for which the payment is being made, and then to really make a correct assessment on the VAT treatment of the service. Second mistake that I would like to mention, which we also see in practice, is the incorrect application or even non-application of place of supply rules when businesses supply services to customers. It's not only relevant for reporting purposes, it's also relevant when we are talking about your VAT costs and your ultimate VAT position. Why? Because the general rule is that when you are supplying VAT-exempt services, because they are treated as financial services, so let's say exchange services, you are not entitled to input VAT deduction. This is a generally known rule, right? But there is an exception which says that if your clients, if your customers are located outside of the EU, and this covers both B2B and B2C supplies, then you as a business have a right to input VAT deduction, at least partial one, if part of your clients are outside of the EU. And what we see in practice is that clients sometimes don't, that's why I say that they don't apply place of supply rules, because they don't collect information about the location of their customers, don't store it because they think that, the transaction is exempt, so there's no VAT, I don't care where's the place of supply. But it is relevant for your input VAT deduction right. And I think for those that are not applying the VAT deduction or are not monitoring where their customers are located, it would be wise to review their practices because it might improve their tax position ultimately. So this is the common mistakes that I see in practice. And I would like to say that, I would apply, at least at the very beginning, a very special 3 questions rule when assessing whether your service is exempt or not. So the first, question would be, is it a financial transaction? So does your service involve the transfer or exchange of money or of crypto assets? If yes, it's very likely that your service is exempt. The second question is, maybe you are in an intermediary in the exchange or transfer transaction. Again, if yes, it might be that your service is exempt. And the third question would be that, if you are just providing some tech solution, tech tool, then it's likely that your service is not VAT exempt. And this is these questions, I would say, is the very beginning of your assessment. And if the answers are pretty clear, then you are in a good position. But if there are ambiguities, then a more detailed analysis would be needed so that you are on the safe side in the application of that.
Thank you, Rasa. We spoke quite a lot about the rules, the challenges, the mistakes that the taxpayers make. I think one very important aspect is tax administration. And I would like to address this question to all of the countries. What are the tax administration initiatives and trends when speaking about taxation of crypto-related transactions and crypto income? And do you think that those trends and initiatives will change with implementation of the DAC 8 directive? So maybe let's start with Sandhya.
Yes, thank you, Rokas. In Latvia, tax authority has prepared guidelines regarding taxation of crypto assets and is kind of regularly updating those. But I would say that so far, definitely crypto asset transactions has not been priority of tax authority. And I think this can be explained by two facts. First of all, probably these transactions are still not that widespread. And secondly, it has been quite difficult actually to investigate those transactions. But as you said, I think this will really change once DAC 8 rules will be implemented and this reporting will start, because this will kind of really materially enhance tax authorities' possibility to collect this information, also to detect tax non-compliances. From Latvian perspective, I would say, of course, it still remains a question how tax authority will be able basically to use that amount of information, like whether it will be efficiently used. But again, we see that also tax authorities are starting to use various softwares and AI tools. So I think we should be ready that there will be more and more interest from tax authority also in those transactions with crypto assets.
Thank you, Sandhya. Tono, what about Estonian tax administrator?
Yeah, thanks. So I think the situation is more or less the same in Estonia as for Latvia. I would say that in recent, let's say, 2 or 3 years, the Estonian tax authority has increased their attention to crypto transactions and crypto income. They have published multiple guidelines and made multiple presentations to different groups and investors. So I think the knowledge about taxation is there, both for the tax administrator and also for persons. But of course, whether or not persons declare their income from crypto assets is another question. So I think the Estonian tax authority is also waiting for the DAC 8 to be implemented and applied in practice, and are waiting for the first reporting in 2027. But of course, let's see what will be the quality of the information that they receive. So, but in practice, yeah, I think this will increase the transparency and also the revenue that the tax authority receives.
And lastly, Lithuania. So over to you, Rasa.
Thank you. I think the situation is slightly different in Lithuania, at least from what we see from our practice. We see the tax authorities being quite active in the area. There is a specific unit that focuses on digital business, and all matters related to tokens and cryptocurrencies are within the competences of this unit. And this unit is responsible for 2 things: providing guidance and performing control procedures. So on the guidance side, they have been quite active in issuing different, explanations on how to apply the taxation rules, both income taxation and value-added tax. So they try to bring knowledge also to taxpayers so that they would perform their tax obligations correctly and less tax control procedures would be needed. But in terms of control, we also observe a growing intensity in audit activities, and during those audits, tax authorities typically request quite detailed information from taxpayers, including reports from e-wallet, from crypto exchanges and other intermediaries, and inspectors analyze those materials, trying to understand what type of transactions have been carried out and what income has been generated from these transactions, irrespective of whether money reached the traditional bank account or not. So I think the knowledge, as Tonu said, the knowledge is there, and Lithuanian tax authorities are already applying it. And of course, there will be a shift and change after DAC 8 comes into force, because the tax authorities will have more resources themselves and will not be relying only on what taxpayers provide to them, but will have sources to double check. So I think it will change dramatically.
Thank you very much. And that concludes our Q&A. And actually, it also concludes our today's event. I would like to thank you all participants for your input, and most importantly, all the attendees for participating in our event today. I know that there was a lot of information shared, and we will share the recording of this seminar so that you can go through most important and relevant parts for yourself one more time. And should you have any questions, our contacts should be on screen. Please reach out to us and we will be glad to answer questions or assist you on your particular situations. And I hope to see you in our upcoming events. Thank you very much.